Hi everyone, my name is Vandita and thank you so much for joining me today on my channel. Well, today we would be talking about mode of investments when it comes to mutual fund investing, because the question that I've received is from Romil Jain and he wants to ask that he's really confused when it comes to investments, whether he should invest in one go via lump sum or he should invest in parts over a period of time via systematic investment planning. All right, Romil, and you also mentioned that you are a new investor. All right, so this is a good information that you're a new investor and it will help me to give you the right suggestion. So thanks for adding that, Romil. Let's talk about your mode of investments. See, since you are new to this mutual fund industry, I'm assuming it's mutual fund industry. So you need to also be very watchful about what categories you're choosing and how you're constructing your portfolio. I always suggest that please talk to an investment advisor, and whatever portfolio you're constructing should be a very resilient portfolio which can help you sail through the ups and downs that you face in the market, right? Because risk is always associated with markets. So please be very watchful on the risk part as well, because you do look into the upside, but there could be a downside as well. So a good portfolio always helps you with the upside and downside, right? Because you invest in various asset classes when it comes to constructing a portfolio, right? Coming back to your question on mode of investments. So when it comes to mode of investments, both lump sum and SIP has its own positive and negatives associated with it. But as an investor, what will suit me is important, right? So lump sum investments, I always feel, is for an investor who's an expert, as in who understands the market, the time when he should be putting his money. Because lump sum investments, you mostly make returns when the markets, when you are investing, when the markets are at its low, right? So you really need to time the market. That's very important when it comes to lump sum investments. On the other hand, when you invest via systematic investment plan, good thing here is that you don't really need to time your market. You just decide that every month I'm going to invest a particular amount, and this actually helps you inculcate a savings habit as well. It keeps you financially disciplined even if you have less in your hand, right? Because SIP investments you do on weekly basis or monthly basis or quarterly basis. So you can really plan the way you want to invest and how much you want to allocate in that particular week, in that particular month. So it really helps you with that in that regards. All you have to do is you have to be very disciplined. If you've decided that on a particular date you are allocating certain amount in a particular scheme, what I would suggest you is, irrespective of how the markets are doing, please go ahead and do that investment. Please follow a very disciplined approach when it comes to SIP investing, because here a lot of people miss on discipline. That is very important, because that's how you will benefit from the market cycles, different market cycles, upsides and downsides. Volatility is bi-directional, and if you want to make volatility your friend, you want to beat volatility, then you need to embrace it. You need to accept it, and you need to see how and what you can do. Here via SIP, you basically average out the returns and you benefit from power of compounding. Whatever interest you earn every month or every week on your SIP investments, that also gets added to your returns. So you really generate better returns. That's what we have, at least many advisors would have noticed, that they do better than lump sum investments. While also I will tell you, since you're new in this space, so When you invest via mutual funds, you do it in form of units, right? You buy units. So say you are investing 5,000 rupees, right? And NAV of that particular scheme is 12 and a half. So how many units you are buying? You divide the money that you're allocating, say 5,000 by the NAV, which is 12 and a half. And you end up getting those many units, which is say four, if you're investing 5,000 and 12 and a half is the NAV at that time, then you are buying around 400 units here, right? On the other hand, maybe some month, maybe there's a fall in the NAV the next month, and you are investing the same 5,000, right? So 5,000 when you divide by this NAV, which is 10, so now you end up buying more units. It is 500 units that you're buying. 1 month you are buying 400 with the same amount. Next month you're buying more units, right? So you're basically averaging out and you're getting more units at the same price. So these are some more benefits that SIP investor has over a lump sum investor. So these are various things. Like I said, timing of market. If you don't know when to time the market, let the fund manager do that for you, right? And you just enjoy the returns that you're gonna get and whatever the benefits you get from these averaging out and power of compounding. So another way of managing your investments that I find is a little more productive way is you can just, if you have large amount of money, you can invest in a liquid fund. It's a debt category of fund which mutual fund industry offers to its investors. So here you can put that lump sum amount and initiate a systematic transfer plan to various other schemes that you want to do. So you can select 2-3 schemes, equity category, and from this liquid funds you can allocate the amount to the other schemes. This is called systematic transfer plan. Here you get the benefit of the lump sum amount also, and that SIP benefits also you get from here. Here also you can generate better returns. So this is another way of investing. So yeah, these are some ways where you can really generate good returns, and these are few approaches that you can apply, right? And I really hope that would have answered your question today. If you have some more queries, you can always write to me. You can directly message me on my email as well, right? And on that note, for now, all the very best with your investments. Please make sure that you're constructing a resilient portfolio, doing the right kind of asset allocation. You're talking to an advisor before going further. If you're not sure about the markets, you're always using an SIP approach and you're financially disciplined. You're making it a point that irrespective of how the markets are doing, you would be making it a point that you're doing your investments in a timely manner, because that's how you benefit from the market cycles. Whatever upsides or downsides, you make volatility your best friend. Thank you very much for listening.